Yeah, so Ziad, I think we should wait just a couple more. Yeah, we should wait a couple more minutes, but for those new attendees or new friends that have just joined the call right now, and it's just because we have, you know, a lot of attendees and several panelists. So in order to kind of, make everything as effective as possible, we definitely want to know where you're all dialing in from and who you represent, etc. But kindly do so in the chat. During the second part of the conversation, you'll have the opportunity to present questions, ask questions directly to the panelists as well as our board. But please direct those questions to me. You can post them in the chat, but you can also send them directly to me via direct message via the chat function. But make sure to do so and always present your name, where you're calling in from, dialing in from, and what company / organization you represent. And then I think we'll have a great time, guys.
Awesome.
Do you want to start, Ziad?
Yeah, let's start.
Okay, so I want to thank you all for attending it's an increasingly popular series this evening. We represent the Financial Policy Council. My name is Christina Björnström. I serve as Executive Director. I'm the AKA event manager or organizer of this webinar. And I also run an artificial intelligence startup on the side. We're super excited to bring on board what we see as like heavy hitter panelists. For those people or those individuals that have been following FinTech for a while, for the last 10, 15 years, what's interesting to see is that FinTech has gone from an industry / sector or topic of, FinTech, startups, et cetera. But now what's interesting to find out or see or discover is that we're coming to a level where FinTechs are maturing to a point where they're really dominating the market. They're really dictating the terms under which we should be understanding the economy around us, et cetera. And this becomes super interesting, especially when thinking in terms of where should you focus your investments towards? What industries should you actually be looking at? How did these FinTech so-called entrepreneurs take it from an idea on a napkin, very cliche or generic to say that, to becoming a unicorn, multi-billion-dollar business? And like I mentioned, we have amazing panelists, some of which are, 30 under 30 Forbes, people that you just Google their name. And that's why I'd like for them to introduce themselves completely, because I don't want to miss anything. But you are in wonderful company. We are super excited to talk to the panelists we have on board, because we're here to really get into the nitty gritty. I think our ethos from a webinar perspective is we want to give you information that is ungoogleable. It's like not the stuff that you read on New York Times or Time Magazine. So you are in special company. So like I said, thank you so much. And I do want to give the floor to our wonderful, I would say charismatic, enigmatic chairman and founder, Ziad Abdelnour. The floor is yours.
Thank you, Christina. Very well said, very well articulated. Getting really good at that stuff. Okay, so welcome to the Financial Policy Council. Welcome to our 4th webinar of the year. Hopefully starting January 22, we're gonna go back to our live events. Some of you may have attended our live events, some of you not. Approximately 150 to 200 people attending in New York City, live interaction. But still this is the last webinar we're doing this year under the Financial Policy Council. Now, for the newcomers here, let me tell you a bit about the Financial Policy Council. We are a 501c3 nonprofit organization that's been in business since 2010. July 2010, so that's 11 years as of today. And we basically produce paper, think tank, research, proprietary research, events, webinars, with one goal. This is not an academic institution. This is, we are here to empower people to create wealth. It's all about wealth creation, especially in times like these, in the times we're encountering today, where everything is anti-wealth, anti-capitalism, anti-growth, anti-prosperity, control, government control. So because of that, and that's the reality, whether you voted for Biden or not, that's the reality. We are going through a disaster. So how do we mitigate this? How do we outsmart the system? And how do we move forward and make, excuse my French, fuck you money? That's what I'm interested in, fuck you money. So this is why we do the webinars. We discuss different asset classes. Last one was about Bitcoin, private equity, real estate, you name it. We tackle an asset class. We bring in the best of breed speakers or panelists to talk about their asset class, how they made money, how we can make money. It's all about making money. This is not academia here. That's what matters. And this is what FPC, the Financial Policy Council, is all about. It's not for the faint of heart. It's not for the guys who are gonna apologize because they're capitalists or because they make money or because they're successful. We welcome the 30 under 30 Forbes. We welcome the mavericks, the rebels, the disruptors. FinTech is a subject now that's one of the hottest topics out there, and it's all about disruption. Will the banks win? Will the FinTech companies? Will Bitcoin? We're gonna discuss all that stuff. I want you to be very controversial in your questions and your answers. This is not the normal here. We are anything but normal here. Normal is boring, normal is stupid. You want people to come up with very bright ideas they don't dare asking at other webinars, on TV, in interviews, or anywhere. This is the place where the mavericks unite, where the disruptors unite, and where people work together to make real money. And I encourage you, and we encourage everybody to meet, to network. It can be through us, it can be directly, whatever. A lot of people have met through the webinars we did, through the live events we did, are doing business together, are being very successful. It's all about empowerment. Success is about empowering people. So to close, we're a very independent organization. We're not banked or backed by anyone. No lobby, no PAC, no nothing. And we intend to stay this way. We want to say what we want to say, and we want to do what we want to do without any obstacles. So with this age of socialism today, you've got to be a disruptor if you want to survive, thrive, and make money. You can't be normal. So let's discuss this. We're going to start by myself asking questions to the panelists, to each one of them or as a group, and they will answer. Then we'll leave the rest, the half of the time for the audience to ask the panelists any questions they want. You know, the questions will be screened by Christina, will be filtered rather by Christina, and we can go like this. And please, when you ask questions, just ask questions. We don't want comments, we want questions. And as incisive, as controversial as can be. Remember, we are here to disrupt things, to make you think outside the box. So before asking the question and starting this, I would like to have each one of the panelists talk maybe 2-3 minutes about themselves, their background, why they're here, and that's pretty much it. We start with the ladies. We start with Carmelle.
Thank you, Ziad. It's a pleasure to be here. My name is Carmelle Cadet. I'm the founder and CEO of MTech. We are building for modern central banking. And being a fintech for central banks, we found ourselves helping central banks around the world, especially in emerging market, transition from what we see as Web 1.0 going into Web 3.0. The world that we live in today in finance and the retail side is booming and moving at a very fast pace. However, the regulatory framework is the biggest risk to any investment in the financial service market today. So we're working with central banks on emerging regulatory frameworks, API first blockchain platforms, and innovation for the future as well. Thank you. It's glad to be here.
Thank you, Carmelle. I'd like to move to Christina, please.
Hey everyone, I'm Christina Chi. So my background's kind of strange. I started my first company about 10 years from a dorm room in college when I was a student. That was a high frequency trading firm. I started trading $1,000 I earned from an internship. And 7 years later, we were trading $7 billion a day. Our largest investors were SoftBank and every single bank on Wall Street. You could say I pretty much, like Ziad would probably say, I played the capitalist game. I lived the American dream, and I really am grateful and lucky to be where I am today. So I was recently left the hedge fund because our fund was paying about $2 million a year to 24 different data vendors, and I hated it. It was a giant waste of money. So I decided I'm going to start my own data company and take down Bloomberg and all those other expensive 1990s, 1980s firms that shouldn't be around anymore today. So that's my dream. My new dream is to be able to make data more accessible to everyone, whether it's market data for trading or if you're using data as an API for your app or your product that you're building. We're going to be your data backbone for any kind of company out there. And so that's our goal with my new company called Databento. So it's a pleasure to meet you all. I welcome any and all questions too.
Outstanding, Christina. I commend you on what you've done. I'm really happy you're on board here with us. Thank you. Vladimir. Vladimir, can you hear me?
Yes, can you guys, so I apologize. Can you guys hear me?
Yeah, go ahead.
Vlad Lounegov, founder and CEO of Mbanq. I'm a familiar face at FPC. I'm on the board as well, so I've been around with FPC for quite some time. Those of you who don't know, my business is to build or stand up and operate financial services companies, including banks, credit unions, and such like. So if you ever have an ambition of becoming your own bank, please hit me up.
Short and sweet, I love it. Just speak a bit louder, please. Last but not least, Tom Meredith. Tom.
Hey, good afternoon, everyone. My name is Tom Meredith. I'm the inventor of the smart token, filed a patent on a ability to do a smart contract even before Bitcoin was around, and have been very active in the digital cash space for well over a decade. I hate to admit how long, but what we've done is we've morphed into a turnkey solution for central banks to issue a stable coin backed by prepaid phone time and other assets that we can tokenize, such as gold reserves, things along those lines, and have, we call it Uberification. The name of the company is called UberFi. So if you want to UberFi your country, look us up. Happy to speak with you.
Love it. Great. All right, guys, welcome on board. Thank you, guys. So I have a few questions. I'm going to start for the panelists. Each or any one of you can answer those, and then we leave it to the audience. So to start, we're talking about disruption, we're talking about scalability, we're talking about all that kind of stuff. So what does it really take to disrupt the entire sector? I know it's a broad question, but I'd like to see your opinion on that.
For real deal.
Disrupting the entire, who's this? Mute your phone, please, all of you. Sean, mute your phone. So the question is to the panelists, what does it take to disrupt the entire sector? Give me your thoughts, 2 minutes each. Whoever can start. Vladimir Lounegov from Mbanq is sponsoring this event, by the way, just for your information. Go ahead, Vladimir, as a sponsor.
Yeah, I get the answer first. Yeah. All right, well, maybe just a 10-second background on myself. So my background is in private equity and banking consulting. So in my career, I actually helped banks make money. And about 10 years ago, I just started focusing just on the technology and financial technology as the source of making money, source of creating wealth for the financial services industry. And now I'm doing the same, but not for banks, not for big banks, but for those who want to start banks, and for young companies, young fintechs, other companies that are basically that are in the business of providing financial services. So what does it take, right? So when I started my career here in the United States over a decade ago, I noticed that there are only 4 companies really that provide core banking services. So at that point in time, there was a lot of innovation happening on the periphery of the core, but nobody really addressed core banking. And companies like Fiserv, FIS, they just became so difficult and so cumbersome, impossible to deal with. It just basically opened up a lot of opportunities for disruption. So disruption at first started from the periphery of the core, but my approach was, why not address the core? Let's start let's change it. Let's change the bank from within, from inside, and then let's empower other financial non-bank financial institutions perform services akin to banks and challenge the banks too.
Okay, anybody else wants to tackle this?
I'll jump in. I think there is a disruption that we're seeing right now. I think over the next 5 years in certain geographies around the world, the fintechs are becoming bigger than banks, larger than banks. And that dynamic itself is going to change not only the regulatory landscape, but I think what we also know of what money is. What is money is the question that a lot of us are asking. I think that's going to be an area to watch for.
Yeah, I would agree with Carmelle that that's exactly what's happening, and with mobile money, especially in Africa. Latin America is a little bit slower to adopt. It's happening. Africa is the perfect example of being able to leapfrog into a digital, what they call a digital money or a mobile money environment. Look what M-Pesa has done for the country of Kenya. It now accounts for over 50% of their GDP, and even more than that in terms of transactions. So you apply that to every country, because every country eventually will have its own electronic version of its currency, i.e. a stable coin. And when you do that, that really opens up the ability to do inter-border transfers and to be more efficient, to catch tax cheats, to distribute benefits to the people a lot easier because everybody has a phone. So it's going to fundamentally change the way these countries do business in general, and will really take away a lot of the power that the banks currently kind of have as a stranglehold over every single move that, let's say, people make with their money.
Thank you, Tom.
I'll jump in really quick as well. So along the lines, you guys both mentioned it a little bit, but it takes money in order to really make a difference in this space. And what I mean by that is, I know there's a lot of venture capitalists here, so you guys understand that as well, right? Every single vendor we use as a company is worth over $1 billion today. So every vendor we use for payroll, for accounting, for our bank, for any kind of service, any credit cards, any kind of startups that we use for project management and stuff, they're all today worth over $1 billion. These are private companies for the most part, worth over $1 billion, so they're unicorns, and they have at least $200 million in funding. Probably average is almost $1 billion per company in funding alone. And so what I mean by that, just realistically speaking, right, if you're a VC firm here, and your due diligence process is 6 months and you only invest $100,000, that's just not acceptable anymore today. It was 10 years ago, but today it no longer is, because the funding environment is different. This is the best funding environment that we've ever seen for the founder, on the founder side. And so, there's just so much money going around that a 6-month due diligence process just is not going to cut it anymore. 6 months is a lifetime in the startup world these days. So that's just one thing I would want to mention, is just that funding is going to be critical for pretty much any kind of business out there in order to be able to grow.
Very good point. I agree with you. Okay, having said that, do you foresee in the future, will there be a world without banks, or could there be a world without banks in the distant or in the near or distant future?
Yes.
Yes, Carmelle.
So
I say yes. It's a simple answer.
I don't think so. There has to be some sort of regulatory framework for people to be able to trust an institution that's been blessed to some extent within their country, that acts as a depositor, receive and hold the funds, and to offer interest in order to attract those funds. You might call it something different in the future, but there has to be something like a bank in order for, I think, societies to function in general.
I remember hearing a sentence that says people need banking services, they don't need banks. And I think that's what you're seeing right now. And I agree with you that the services, the functions might exist, but it might be a smart contract versus an actual brick and mortar.
Yeah, it'll be called, right now we call it a bank. Credit unions are a whole different animal. We work with them too. So different strokes.
Yeah. Christina, anything to say?
I mean, yeah, we put most of our money not into a bank anymore. We put it into different kinds of funds and other kinds of anything that can give us better returns than the, shitty interest rates that, sorry, pardon my French, but, the low interest rates that the banks offer today. So with the services of the bank, but just with better returns. So yeah, I totally agree that I think times are changing and the need for the traditional bank is getting less and less for people out there.
Got you. All right. I hear every country will issue its own stable coin by 2030. How countries will issue digital bonds using DeFi?
Did you say digital bonds?
Yes, using DeFi. For you, Tom.
Well, that's right up our alley.
Exactly. That's why I asked you.
You set me up, Ziad. Thanks for the what we have found in talking to these central banks is that yes, they want an electronic means to distribute benefits. Yes, they want electronic means to monitor transactions. But what they're really interested in is trying to raise money. Okay. So what we've done is, because we're smart token experts, we've been doing this for so long, we've actually figured out a way to create a token, if you will, a smart contract that generates interest. And there's a lot of interest in issuing digital bonds to tap into the $2 trillion plus digital currency in general market. But also we think this will become a new asset class because people will be able to get in and out of a digital bond if it's been tokenized. So the concept is to take some of these, let's say DeFi techniques. We're just about done building a product that we call Bondify, that will, in essence, create an automated market maker, the whole DeFi process, if you will, and try to become a rated instrument that the government of Nigeria could sell on the open market. The beauty of it is that bonds today, once Goldman raises that money for you, there's no market, there's no aftermarket. If you break it up into tokens, little guy can get in and out of Nigerian bonds, and that way the price will actually meet a real market price versus whatever Goldman says.
Interesting.
No offense to Goldman folks here on the call.
Yeah. Anybody would like to add to that, or we can move to the next question? No, I think this question was specifically addressed to you, Tom.
Yeah, thank you. It's something that really addresses the need for raising funds for infrastructure using these new constructs. We've always been trying to bridge the world between the digital and the crypto market and the needs of the market for funding to do large infrastructure projects.
Yeah, we'll go back to the crypto market. A question for all. I mean, building, scaling your fintech company or whatever. How do you protect your idea with patents and trademarks? Financial services, that's very, very challenging. Go ahead, Vlad.
Yeah, I would say that just basically echoing what Tom said a little bit earlier, patents are very important. So this is one thing that in hindsight I should have done more of, and we should have done more of at Mbanq, which is to give a stronger focus to patents and trademarks. I think that oftentimes for small companies or for young companies, they have to show something to the investors, and to have a patent is a real asset, right? It's an asset that you can put on the balance sheet. Can you really protect your invention? Potentially, but at the minimum, it serves as a starting point for fundraising or something that creates value.
Okay, anybody?
Just really quickly, I think there's times when I think most things, you know, obviously if you have a great idea, it should be patented, but there are some things that you can keep as a trade secret. Good example is Coca-Cola's formula is actually not patented because it's a trade secret, right? Or else people will try to copy it or do rip-off versions of it and stuff. So yeah, that being said, I think that, you know, when in my previous life as a trader, you know, there's things that actually strategies, we don't want to patent the strategy or the technology because then it becomes in the public domain and there's ways to rip it off, you know, and still get away with it. And we don't have time to be in lawsuits and to pursue those types of things. And so it's better to just keep it as a trade secret. So, but absolutely, if it's a utility patent on something that's pretty obvious, a product that you're about to debut to the public, then absolutely it's important to be able to protect your moat as much as you can.
Great.
Those are the key differences, as she pointed out correctly. You know, for instance, I filed for patent for a smart token. Oh gosh, started the process 15 years ago. Couldn't get it through the patent office, so spent a tremendous amount of money, time, and effort. But we currently have a patent on what we call an atomic swap wallet, so that you can actually do any two. Swap out any two digital currencies or fiat currencies in a wallet that you don't even have to download. So, you know, again, we'll see how it plays out. I foresee a lot more legal fees in the future is all I see so far.
Yeah, lawyers, they're always here to make money in between. They never. Sorry. Talking about cryptos, how will cryptocurrencies, you think, fit into our day-to-day world, going from investment holdings to actual daily uses?
So I'll jump in on the crypto side. I think one thing that we're looking at here, given that we're having this conversation, is that Bitcoin won, if you will, given where we see the evolution of money and the cryptocurrency aspect, the adoption curve. For me, it's always something that I've looked at in order for me to invest. The valuation and the volatility is not particularly what I pay attention to. Is really what is the adoption, what are the channels, what are the users, and what is the ecosystem that's growing around it. And the fact that we are in the central bank digital currency business is because of Bitcoin, and it's because of Libra, because of the emerging of those assets. So yes, and including that as part of our day-to-day lives is going to depend on what is the set of economics and use case around it. But I think the volatility that you see will keep certain cryptocurrencies as investments, and they make more sense as investments than day-to-day forms of payment. But stable coins are emerging as solving some key problems with the stability and the pegging. Can you build new rails on top of the old fiat system and provide more liquidity? I think you'll see that emerging on a day-to-day for cross-border, and then domestically, you'll see an emergence of CBDCs that really give that stability locally.
Yeah. Anybody?
Okay, just really quick comment as well. I don't know if you guys know this, the most popular class on crypto, DeFi, blockchain, that kind of stuff on YouTube is an MIT class taught by a professor named Gary Gensler. I don't know if you guys know that name. He's now the chair of the SEC. So that being said, you know, at least now the current SEC chair compared to the previous one is a little bit more familiar with the world of, you know, blockchain and crypto, and is a little bit more friendly towards it. However, you know, there's parts of the class, if you ever taken the course on, or at least watch his videos online, you know, parts of the course you might disagree with, right? And so there are certain issues that are still going to arise because it's hard for one person to be able to judge, you know, what to do in this space. But absolutely, I think that the world is finally moving a little bit more towards a space where we'll be able to, you know, transact more in blockchain, not just for investments and for hodling your all the money that you have, but more for actual transactions. Ironically, the last time I ever used Bitcoin to buy something was I bought like dinner for someone using Bitcoin like back in like 2013. I really regret it. You know, I wish I could have just held that on. That would have been worth over $1 million. That like $1, you know, $10 dinner, right? Ridiculous. And so like right now is still, right, from an investment perspective, it's not something you can, because the price is so volatile. It's not, from an investment perspective, the right time to spend stuff on dinner, unless you absolutely need to. But just some quick thoughts there. Yeah.
Very, very impressive.
Well, I would agree with Carmelle as well in that I think you're just going to see the stable coin buried in the technology. People don't know how their Visa card works when they swipe it. And in essence, that will slowly morph into and take over those transactions will be conducted electronically, maybe not on via a blockchain even. So some of these countries that we're talking to, they don't want blockchain. It slows things down, even though blockchains are getting faster and faster. They don't want to see necessarily a public audit. The Chinese digital yuan, for instance, is not using blockchain to the best of our knowledge. So it's going to be some sort of hybrid between the two, and every country is going to do their own thing, but the transactions will be digitized and tokenized in one way, shape, or form that just the general public just won't see it. They're just going to walk up like the QR code system in Nigeria. They'll flash a QR code on their smartphone, pay for something, and walk out. They have no idea what's behind it.
Interesting. Vlad, you want to add something?
Well, I would say I would agree with Tom. I think as far as the settlement is concerned, anything that's at the background, and I represent the infrastructure side of the fintech, right? We're all moving to new technologies, right? So of course, things like Visa and MasterCard and other networks, they're so antiquated that you need to have something new. And then some of the new countries show us that you can actually leapfrog into something absolutely different. So long story short, I personally think that everything that we're discussing now will be probably buried in technology, and the consumer will never find out, but we will make it so seamless. All of us here on the panel and the participants of this call will make it so seamless for the end consumer, just to make everything happen like never before.
And Visa's not laying down on this either. They just published a white paper on an blockchain protocol, which we've reviewed quite extensively. They're not going away. They're not saying, "Oh yeah, we give up." No, they're not doing that.
No, for sure.
Absolutely. Oh, I have a couple of more questions for the panelists. Then I'll open that up for you guys, the audience. Well, any questions you have. First, if you could share this with the audience, please. Some of them may be familiar or not. How CBDC can change a country's economy? I'm referring, for example, to Kenya. The M-Pesa success, something like that. How can it change the country's economy? CBDC. Starting with Tom.
So you're saying how does a CBDC transform a country's economy?
Can transform a country's economy.
Multiple ways.
Let's share some.
If you look at what just a single electronic standard has done for Kenya in terms of the volume of transactions.
I was referring specifically to Kenya. That's perfect.
Kenya is the poster child for what the benefits of doing so. I think something like it's ridiculous numbers. 2/3 of all their transactions in the country are conducted over M-Pesa. Over 50% of the GDP of the entire country is conducted over M-Pesa. And you don't need a smartphone. It's just a SIM card, and you can do it via text. So what's happened is it's become the guiding light that, we can do this. The problem with M-Pesa, it's privately held. It's the largest telco took advantage of there was a loophole in the banking laws there. And my original CTO is from Kenya, and we first got launched over there. So we have a history. We know the history well of M-Pesa. But what you want to do is you obviously want to make the standard more open so that every bank and every carrier can participate, because the banks and the carriers have been fighting this space for the longest time. So the benefits of having standardization is it just drives the cost down of the transactions, which is a problem with trying to conduct over Bitcoin or any type of Ethereum smart contract. The costs are ridiculous. So you can't buy $1 worth of prepaid phone time the way we sell this in these countries without, you can't pay $3, $4 for the transaction. Makes no sense.
Yeah.
Again, that bodes for centralization, but the benefits again are numerous. Just efficiencies for the entire economy. Everybody benefits from low cost transactions. It's practically free. You don't have that 3% tax. You're paying Visa for the privilege of using their rails. You're creating your own let's say intra-country rails. Distribution of benefits. Everybody has a phone. Everybody has an ID now. You go bang, here's your distribution of benefits. There's nobody in the middle scraping off some sort of process or servicing fee. Thirdly, again, the retailers don't have to pay any type of transaction fee because it's just a free, frictionless. It's just like cash. So you walk up, flash your do a QR code, and it's done. And so benefits, fraud, tax cheats. You can tell where people are actually spending their money. And of course, we talked about to be able to create a digital bond using that same token for the government to raise money. So it can transform an entire country. We've been trying to pitch Lebanon on this for the last year or two because we know how mucked up a country they've been. And we've been at the highest level over there, and they just can't agree on what to do about anything. So it's more of a political intransigence issue than it is a technology issue, as everyone who's involved with technology on this panel knows.
Yeah.
So I'll add a few points to that. One of the key benefits that we're targeting with central bank digital currency specifically is inclusion by design. And we have a particular point of view on blockchain technology being able to do that better than any other form of technologies right now, at least traditional technologies. But the concept of banking the unbanked has been pushed and promoted for many, many years, but we've seen the decline from 2 billion to maybe about 1.7 right now. And those are the official numbers. We think there are more people when you count the underbanked as well. But there's a clear demand in the market for new financial services because there are new needs for financial products that address different problems, and that the banking system does not particularly provide that consistently and across the board in addressing a low income person versus a high income and high net worth person. So when we think about deploying a technology that enables the embedded governance to enable the lack of intermediary, to address the lack of intermediary that happens, that fosters that provides inclusion by design, because you have an asset that is issued, that is trusted, the cash that is trusted, it comes to the ledger, it comes with the set of rules that allows you to have a wallet, and therefore you don't need a bank to facilitate that. So from financial inclusion to economic development, I'm originally from Haiti. I think probably most people on the call today can understand and know what's happening in Haiti, the difficulties at the economic level. Imagine people in Haiti right now cannot get paid even if they work, right? So imagine the new rails that you can build when it comes to digital currency and CBDCs. Economic development is another one for us.
Very interesting. Thank you, Carmelle. Christina, you want to add something?
I agree with all of the above. I don't work in blockchain. I don't work in crypto. We did start a crypto fund back in 2017, but that's another story. So we're just traders, but we don't really work on the infrastructure behind the scenes.
Okay.
You took the smart route.
Yeah. Okay. I think that's pretty much sets the tone here. I'd like each one of you for maybe a couple of minutes, if you could share with the audience some personal story or advice, as to building your business, navigating in this high technology world, etc. And then we can have them address their questions, if it's okay with you. And you've been around the block, Tom.
I'll quickly start. So I guess just general advice. There's no single playbook for starting a business or for starting a hedge fund or a VC or whatever you guys are working on these days. Meaning that you can bootstrap it if you want to. You can raise $1 million in funding or $1 billion if you want to. There's no single playbook. I think that's right or wrong. And I know there's a lot of CEOs will tell you have to do this, you have to do that, and it's like just do it the way that works best for you, and figure it out. There's no such thing as one type of leader that's perfect. There's leaders who are very strict and honest. There's leaders who are very, kind and candid. I don't know, there's all kinds of different types of leaders, right? And so that's just one thing I'd mention is like, don't worry about, you see startups out there, competitors maybe raising $1 million or $1 billion or whatever. Don't be so, don't compare yourselves to them too much, and just continue to go along your own path. And I think that's the biggest thing. Like, look, I worked in the most competitive industry in the world, right? High frequency trading, a hedge fund, and especially given my back then I was in my 20s, it was obviously very competitive. And I wouldn't have, if you showed me all the statistics, so the failure rate is now like 95% for our industry, very high failure rate. Would I have done it? I don't know, but I did it out of a passion because I still wanted to do it anyway. So long as it wakes you up in the morning and you want to do this, go for it. Even if people talk, they talk badly about you, or they think this is a ridiculous industry, like, oh, crypto, banks, that's never going to happen. Even if people say that kind of stuff, like, continue to just do whatever you do, right? And people will follow you so long as you're enjoying your own journey. So that's what I've learned over the years.
Well, let me tell you something. I love the way you think. I think very much the same. I built and financed and operated a number of businesses. I'm a bit older than you, but I've been through the drill. And I totally agree with what you said. I really. There's no standard formula, obviously. It's all based exactly also on your DNA, what type of a person you are. Where are you more inclined on the trading side, on the VC side, on the investing side, on the banking side, etc. The important thing is to excel. So don't be afraid, be fearless. You're going to make mistakes, you're going to fall, you're going to trip. Keep on going. That's my opinion. Tom, and then Carmelle, I'd like to hear from you. And last but not least, Vlad, as the sponsor of this event.
Yeah, Christina, very, very well said. But I think the one word that you got to have as an entrepreneur, whether you're kind or strict or whatever your operating characteristics, is that word passion. If you don't have passion for what you're doing, do not do it.
Yeah.
You just can't say, oh, my dad wants me to be a lawyer and you hate the law, or my mom wanted me to be a doctor when I grow up. No, it doesn't work that way. You've got to have passion for what you're doing. And that's what's driven me to take this this quest on. I remember it's been some time now. I don't want to tell how many years, but I've always been fascinated with the whole concept of electronic cash. So some of you may remember cyber cash a billion years ago. I thought, oh, these are the guys, right? They got it figured out. They're going to do it. They're trying to do it right. And I met with the lawyer who just happened to be here in Atlanta with me. And we sat down at Starbucks and I said, well, how's it going? He says, oh, horrible. He says, we're just hitting brick wall in Congress. They don't understand what the hell we're talking about. And it's going to take 10 years to do this right. And he says, well, you can do electronic processing for pornography, for gambling, make a lot of money, or you could spend 10 years and try to do it right. Well, I walked out of Starbucks saying I want to do it right. So I've just taken the long haul. And again, the passion is what has sustained us. So we're here. We did the old Wayne Gretzky trick. We built where we knew the business was going to go. And we've got a real nice turnkey solution to UberFi an entire country, from soup to nuts, retail up to doing bonds. So
brilliant, Tom. Thank you very much.
Got to have passion.
Thank you, Tom. Yes, Carmelle.
So I would echo that, but also add a big lesson for me in starting MTech is around the team building, the ability to build a team around you. And I think the ability to find people who come along for that passion, and being able to communicate that passion to them and convince them and connect that to something that they can resonate with is something, and especially if you need people to be on the Miro board and designing with you at 1 o'clock in the morning, it's the passion, it's the belief and doing that with you. So for me, selecting the right people, building the right team around a vision is, I think, it's absolutely key. Second to passion, not just to not repeat what Christina and Tom said.
Thank you, Carmelle. Thank you so much. Vlad, you can close.
Yeah, so just one fun fact without repeating what everybody else said, because actually, to be honest, this is all resonates very well. So when myself and my co-founders founded Mbanq, we opened up these opportunities for others to join us and bring some money. So to join Mbanq at that point in time in 2016, when it was just an idea, but a very disruptive idea, we asked people to bring money, right? So they had to, first of all, give up their jobs, right? Because we all come from consulting or banking background, so they have to join full time to have skin in the game to bring some money. And now we emerged as an employee-owned organization. And as they say, success has many fathers, and the failure is an orphan. So fortunately, we have been successful, and the fact that we were able to fundraise from within, from the team, has been a very big push for us.
Thank you, Vlad. Brilliant. Okay, Christina, we can. I'm sure you have a set of questions from the audience. Let's go over them.
Yes. Thank you, everyone. And this has been, just on a personal level, a little bit of a mind trip, because every time you've directed questions to Christina, my natural inclination is like, wait, I don't know why he's asking me this question. And then, right. And I've just been waiting for the cue, Christina, because I know you're not going to mention my last name. And so, yeah, I just wanted to say that small little joke, but, you know, along the lines or the theme of joke, basically, the way that we're going to do this is to those of you that sent me questions directly and in the chat box, thank you so much. So I've been reading over everything. We have a lot of interesting questions. We may not be able to get through everything. And so basically, for whenever I've seen questions that are basically rewordings or what's it called, summaries of other questions, I've merged them into one. So I've tried my best to bring all questions together, and then I've also dropped in a couple questions I'm personally curious about. So the first one is actually directed to Christina, fellow Christina. You had mentioned, and again, kind of along the lines of joking a little bit, but you had mentioned that you wish you didn't use crypto to pay for dinner before, way back in the day. So it just made me immediately curious, what made you then come up with the name Databento or Databento? Because bento, for those that know Japanese food, means like Japanese lunchbox. So just curious.
Yeah, that was the most expensive dinner I've ever paid for, in hindsight, $1 million dinner. But anyway, so the name actually Databento came separately. It was because we wanted our users to be able to, the analogy is like right now, data sold by like Bloomberg or Refinitiv, it's sold in bulk, right? It's like $25,000 a pop. And you're like buying, it's like going to dinner and you're buying the entire grocery store. And we're like, let's just make it so you can just buy, we're selling data in smaller pieces based on what the user wants. So you can customize exactly what you want down to the symbol. In that case, it's almost like a bento box. So you can customize your bento box and then just check out and self-service. So you don't have to talk to a sales guy. So we're just trying to make data a lot more accessible to not just to startups, but also to large firms as well, so that they can explore new products a lot quicker without having to buy the entire data set of 50,000 different products at once. And so, yeah, that's how we came up with the name.
Awesome. I really love that story. And so, and before continuing forward, Tom Meredith, I would say throughout this conversation, and I believe it's because they heard your opening introduction and also maybe read your profile, I've received the same question literally every 3 minutes, like, what's a smart coin? Can you tell us what a smart coin is? What does he mean? Am I not smart to not know what it means, et cetera? So could you kindly, as the person that, you know, officially has coined the term or invented the smart coin, what is it from your perspective? And what do we need to know about your definition of a smart coin? Oh, you're muted, by the way. Please unmute.
I've been in high tech a long time, okay? And I've been through the PC revolution, the internet revolution, and now the blockchain revolution. In fact, I was in an AI company for a number of years as well. So it's all technology. And every time there's a new technology, we all argue about definitions. because everyone has a different idea as to everyone's grabbing that zebra or the elephant blindfolded. So, they see different things from while they're fumbling around in the dark. So what I coined was the smart token was what we called it. And it was real simple. I was involved with, we first tried to digitize and monetize the music industry. Does anyone remember a little company called Napster? They had a way to obviously share music and just disrupted an entire multi-billion-dollar industry. And when it came down, the hammer came down on the from the legal perspective, they just decentralized, and therefore there was nobody to go after. There was no centralized way for the industry to go after it. So we pitched the record industry to say, hey, we figured out a way to tokenize your music. And we figured out a way to tokenize payment for that music so that two individuals who don't even know each other could do a discovery in this true peer-to-peer space and be able to buy and sell your music, but having what we call back in the day, a digital rights management wrapper. So you would wrap the music and say, hey, this is Britney Spears' hottest song. It's $1. And if I sell it to you, I make a nickel off of it. 20 cents goes to the record producer, 20 cents goes to, the label, however they break it up in the record business. We had all this figured out. And we lost to a guy named Steve Jobs, I think his name was. He had a centralized approach. So this is my first big entrepreneurial effort with decentralized technology. So we wrote a patent on it and said, hey, you can take something of value, something, whether it's information, whether it's a record, whether it's cash, whatever you can store it, wrap it up in something and have a way to send it and restrict its use case. So we called it a smart token. And this is before Bitcoin came along. And then Ether came along, and that was sort of like, hey, that is the step we've been talking about. Unfortunately, the patent office being what it is, no patent. Otherwise, I'd be sitting with Greg Bauer in a nice tropical setting and sipping on a Mai Tai. But that being said, that's what a smart token is. So we've been focusing over the years on how do you apply the technology to the token itself. It doesn't really matter. It doesn't really matter about the blockchain. What matters is how do you imbue the token with specific characteristics. That's why we came up with this bond idea, this bond token. And it's pretty clever. And it doesn't matter which blockchain. Blockchains are irrelevant. It's like, are you going to do a transaction over Visa? Or are you going to do a transaction over MasterCard? Or are you going to do it over Swift? It doesn't matter. Those are the rails. What matters is what power or control or giving up control do you give over the actual token itself, and therefore a smart token.
Thank you so much, Tom. I do remember Ziad mentioning, please ask as many controversial questions as possible. So my other question to Tom, and then I want to jump to the next question is.
I'm sorry, I'm married.
Yeah, sorry, is would the next question upon finding this out or hearing you give this response be, okay, like, are you the original founder of NFTs, or what's your opinion on NFTs? Because what you described sounds, are you the real NFT guru person?
No, I'm the real Eminem. NFTs are a fad. I had a guy hit me with an impassioned plea the other day. And the only reason I took the call is because it was a close friend of a close friend. He's like, I know the guy that he was the big #2 guy in a big hit movie 50 years ago. And he's got this really good sketch artist that's drawing pictures of him when he was young. And he's going to hand sign them. Can we do NFTs on this? I said, yeah, you could, but who the hell is going to buy it? It's a fad. It's nothing but trading cards for athletes and for music celebrities. there's no real market there. It's nothing but a fad. You know, is there a business for doing trading cards for you know, is a Babe Ruth card, is original Yankee, you know, rookie year card worth something? Hell yeah. Is a picture of some guy from 50 years ago worth something? Yeah, but not a lot. And you're going to spend more money, time, and effort marketing it than you ever will by selling a lot of these things. And I know a celebrity closely that we've done a turnkey solution for, and they're getting into the business. And the jury's out. I just don't see success. I see a lot of hype, and I see, you know, big names getting in there. But it's not an industry that it's not a growth. It's a growth industry for sure. Right now, you go from zero, anything's growth. But you know, for the most part, it's a fad, and I don't want to have anything to do with it. But I didn't say that to all my NFT friends out there.
So I was imagining this to be like a direct one question, one response, but based on what you said, I would love for the other panelists to chime in, because we receive tons of questions about NFTs constantly. Like, should we invest? Should we take it seriously? So yeah, to the remaining panelists, please jump in on, you know, the first person to come in with your response. We'd like to hear from the rest of the panel, please.
There's just really funny story. Sorry, Carmelle, I'll get to you really soon. So really funny story on my end, which is I'm used to running these like $1 million trading machines, right? That have these really sophisticated high frequency trading strategies. We're not front running, by the way. I don't want to explain any of that, but just strategies that are taking in data from the markets, publicly available data, and creating trading strategies that are automated. And it's funny because over 2020, actually this past 1.5 years, Bitcoin and crypto in general is 5% of my portfolio, but it's 95% of my returns over the past 1.5 years, versus these $1 million machines I have that are trading just regular fiat currency and are not producing nearly as high of returns as they should be. And so it just is a lesson for me in the sense that sometimes the best strategies are the ones where you just kind of YOLO a little bit of money. And you know, I had no strategy when I put money into Bitcoin back in, I forgot how many, like 10 years ago. I had no strategy, right? I was just like, oh, well, let's make a bet. And I think I lost a bet, and I just like put some money in, and that turned out to be one of the best investments I've ever made. There was no fundamental analysis whatsoever. And that's the other thing is, like, I think when it comes to making investments into NFTs or anything else these days, you have to just take everything you learn in the classroom and just throw it out the window, because fundamental analysis just does not work on any of these types of things. A lot of it's high risk, high reward. There's a lot of luck involved, but the only way to understand how to play and how to be in this game is to start to play it to begin with. And so, I mean, obviously don't put all your eggs in one basket. I'm not a financial advisor, but, you know, I always am a little bit more, given the stage I am in my lifetime right now, I'm a lot more like friendly towards taking more risk, just because it's paid off pretty well in the past when it came to Bitcoin and Dogecoin and all those other things that I just kind of made funny bets on without even analyzing it. So yeah, I would say the same for any of you guys who just want to just try it out and see what happens and put in as much money as you're willing to lose. And then that way you're always going to win.
Yeah, so I'll jump in. I actually have been fascinated by the NFT market to the point where I think my husband told me the other day, I ping him at least once a week and tell him that he needs to do NFTs about something. He's a photographer, architectural photography. So, and he's like, no, it's not my thing, it's your thing. Kind of, let's keep it at that. But the idea, however, the broader market around NFT, I think the way to think about it is, people have assets. There are a lot of assets in the world that have not been represented in the digital economy. And when you think about the trend, when you think about how commerce is moving and business more generally and interactions globally, you find different ways of creating value. And I think that's what you're seeing in the NFT market is just another representation of how people are trying to create value. Now, whether there's a market around it, to Tom's point, I think it's early stage, but you can see a demand and a supply of assets being created, and then finding the right people to create value around it. Because what is value, right, at the end of the day? And this is why I said at the beginning of the conversation, like, what is money? and I think this is a big question that people are asking right now, is just, what you represent via an NFT. Don't think about an NFT as a class itself. It's just an opportunity to represent an asset in a way that is fun. It's a different user experience. It's complicated, which makes it difficult for a lot of people to get into it. So you kind of have a small group of people who are getting into that. But as that economy kind of broadens and creates value in different ways, I'm not so sure that it is a fad per se. I think you're seeing an emergence around IP. The problems around IP rights, for example, are things that are very difficult, and people have been trying to use blockchain technology to provide traceability, visibility into IP rights, property rights. But imagine if they could be represented differently, instead of just sitting on a ledger and a record, but it's represented in a graphic and tradable way. So I would say watch this space.
Well, take the analogy of music again, because I was there at the beginning of the file sharing industry. So let's say that dollar you spent to buy Madonna's latest hit back in the day when this was happening, how is that any different than saying I just spent $1 to buy a Shaquille O'Neal trading card, his rookie year, and I own number 1,392 version of this. It's the same thing. It's what's the value? And going back to what Christina said, yeah, you can throw what against the wall and some of it will stick. And don't get started on Bitcoin. I don't see any value in Bitcoin myself, other than quote unquote a potential store value. The minute somebody cracks Bitcoin's encryption, the minute you throw a quantum computer at that sucker and the smallest crack develops in that thing goes to zero in a heartbeat. And so what is a dollar trading card or $1 for a Madonna song worth? It's worth $1. And right now, everybody wants to monetize their intellectual property. Every guy that's ever been in the movie, any guy that ever took a picture of something, every guy that ever played basketball, they're all trying to figure out, hey, how do I monetize my intellectual property? I just need to build an NFT and I'll get rich, which has been the crypto mentality from day one. But the problem is, out of the 10,000 kids that have all issued a digital currency over the last couple of years, maybe 1,000 of them have gotten stinking rich. Well, what about those other 9,000? They've all lost their money because they didn't have anything that was worth anything. And the same thing for NFTs. So, some kid will die of, some hot new prospect will die after he's minted an NFT baseball card, and the NFT card will go up in value because, hey, he died. So, I mean, I hate to be morbid, but I'm just saying, I see it as a fad, and I don't see anything that will dissuade me from that.
I appreciate Tom. Christina, if you can move to the next question, please.
Yeah, I was about to offer like a 10-second rebuttal opportunity. However, Tom did mention a trigger word, or what's it called? Yeah, I'll just say quantum computing, which a lot of people are interested in figuring out the panel's opinion on. So Joel Sadler from New Zealand, and quick mention is that we have people dialing in from all over the world across every single time zone. So this is very exciting. So Joel Sadler, thank you. Oh, Thomas, wait, is it? Okay, Joel Sadler of Thomas & Sadler in New Zealand, thank you so much for joining us today. His question is, I'm interested in finding out the panel's opinion on the emerging role of quantum computing and networking technologies. I'm assuming he's asking as it applies to FinTech and our conversation here. What are your opinions? And I'll just leave it open to the floor.
I guess I'll start. So quantum computing is basically, its origin in history is sort of like Bitcoin in that it was started by people who you probably either you don't know who they are, or in the quantum computing case, it was started by people who were like MBAs, not physicists, or, you would hope that they would be started by PhD people who, made a breakthrough in the physics realm and discovered the qubit or whatever, and discovered quantum computing as a result. And so the challenge there is that the origin is, in my opinion, it's something that if you talk to any physics PhD about quantum computing, they're going to be like, this is a ton of bull, because it's a space that was invented by people where the concept sounded great. It got a lot of venture capital, but has there been anyone with actual credibility in the space to be able to break through in this industry? Probably not. Of course, we've looked at quantum computing because we're a high frequency trading firm and speed is really important to us. And if there's any breakthroughs in that space, that'd be great. Realistically speaking, we're still quite a while away from being able to implement any kind of quantum computing into our strategies, or into any kind of startup or company's life these days. And so it's a great area, though. There's a lot more research going on, which is great. I'm glad it fueled a movement into an area, but we consider it hard tech, meaning that it's not something that you can create a quantum computing startup and make $1 billion today off of. It's something that you might be able to do 10 years from now, but definitely today it's still in the frontier realm where you still need to be able to make some scientific breakthroughs. But if you do discover it, then good for you. You're going to win a Nobel Prize. So I applaud anyone who makes any breakthroughs in that field.
Yeah, to echo Christina, I like I said, I've been in the computer business for a long time. I cut my teeth in the industry with a company called Digital Equipment Corporation, and we were the game changer, with the mini computer, which was a big thing back then. Selling computers for only $100,000 versus $1 million IBM computer. And I've been a computer architect since then, and just have seen it. I've got a strong physics background. The technology is there. Okay, it's not impossible. Is it going to take 5 to 10 years? Absolutely. And my biggest concern is that the Chinese are getting ahead of us in this space. And I think we saw that recently echoed by I think the fellow was the head of one of the major, I think it was the Navy or the Air Force. He was their chief technical officer. And he said that the Chinese are ahead of us. It's a done deal. They're directing billions and billions and billions of dollars of resources into being that AI/quantum computing gurus. And it's going to happen. It's just a matter of when. And I'd say Christina is correct. It's in that 5 to 10 year time frame that you'll have something that will be able to break a Bitcoin encryption. It'll be able to break any encryption. They're getting better and better with what Einstein called the spooky science of being able to have two atoms be able to change immediately faster than the speed of light, even though separated by miles and miles. So they're making these progression slowly but surely. Is there a computer out there and that is going to do it tomorrow? No way. Is the quantum financial system that everyone is so worried about going to happen anytime? No way. It's a myth, in my opinion.
Thank you so much. I have a question again, going back to the questions that we've received from multiple individuals. The title of this webinar is basically going from disruption, like a key startup-y term, disruption to scale. At what point, and this question is directed to the entire panel, please jump in, kind of ad hoc, whoever comes up with a response first, but it would be nice to get everyone's perspective. At what point did you guys sense an inflection point, that inflection point of this is just, a small business, going from a small business to, okay, we're scaling now. What is your definition of scaling? Because I think scaling means something entirely different in FinTech. So yeah, basically, since we have Tom who just spoke and you're on camera, or you're zoomed in, maybe I'll have you respond to that question first. Like, what's your definition? At what point do you feel or sense that you're scaling, and what are the key variables to look out for? And then I'd love for the rest of the panel to respond.
Well, again, I'm trying my best not to monopolize the, but I am old and opinionated, so I guess that just comes with the territory. Scaling, we liken what we've been doing for the longest time of dropping hot coals in a very dry field, knowing that there's a big wind coming through, and we feel the wind now. We feel the wind. The coals are still hot. The field is still dry, and we're getting traction in the countries that we operate in. So scale to us would be when we get that central bank that says, "Yep, we're going to do the entire country, and everyone in the country. Here's a database of everyone in our country, their IDs. We're going to tell them to come to your website and get that free mobile wallet that you've been talking to us about. And we're going to issue $10, $20, $30 worth of our stable coins to everybody in the country." Kind of like what our friends have done in El Salvador, which is right next to where we've got a deal going with Honduras. We're watching it very carefully how they're rolling out Bitcoin. I think it's a disaster myself. I think it's a disaster in the waiting, but that's the sort of scale I'm talking about on a country by country basis. That's when I know that will scale.
And thank you so much, Tom. I would love for Carmelle, then Vlad, then Christina to chime in on the same question.
Sure. Being a 2-year-old company, for us, the last 2 years have been kind of the early stage. And earlier this year, we signed our first central bank with the Central Bank of Ghana to help them digitize their regulatory framework and their regulatory approach and how they look at fintechs, how they look at certain financial services coming into the market across Africa and the Caribbean, for that matter, and other jurisdictions. The regulatory frameworks are still new. And that's why the initial reactions are to ban certain new services, whether it's crypto, whether it's any blockchain type of asset. So for us, scale looks like next year going into the path of saying, how can we help central banks across the board, across Africa, across the Caribbean, digitize their regulatory framework? And as we work with them to do that, introducing digital cash infrastructure is what we look at, not particularly at the software application layer, not particularly the individual use cases that the fintechs are already filling the gaps for, but how do you digitize the infrastructure at the central bank level in order to provide a modern way of regulating and also being the operator of the country's currency. So we're looking to next year for us to scale. We're in the middle of the Series A right now. So for us, turning the corner is a big milestone, and getting into 10 central banks, 50 financial services, and getting a lot of transactions running through the systems for us that scale.
Yeah, thank you, Carmelle. And then Vlad, and then Christina, please.
Sure. Well, so for Mbanq and myself, the inflection point actually took place several months ago when we realized that we are opening so many accounts, essentially thousands of accounts per day on our infrastructure for young companies, neobank, challenger banks here in the United States. And then at some point in time, a few weeks after that, we realized that we're now talking about 100,000 or 200,000 account by the year end, or 250,000 accounts by the year end. And there was one weekend in which some of our clients had promotions going on, open up a new Visa debit card, and we actually took 13% market share in the United States with the largest card manufacturer for Visa, our partner. So we issued more cards in that day than traditional banks like Bank of America, for example. So at that point in time, I realized that it's not fun and games anymore. So we're no longer that young company, the disruptor that we wanted to, to see ourselves. Now we have challenges which are fundamentally different. Now I'm ordering chips for chip cards, right? So I ordered 75,000 chips, competing with car manufacturers to make sure that I can continue issuing cards for our clients. So this was the first, I guess, the first side of the inflection, or the first inflection point. But then something happened this Monday. So on this Monday, a public company, Temenos, announced partnership with Mbanq. And on that day, the markets generally showed a very poor performance. So, but Temenos gained about 3.6% in their share value just on the back of that announcement. So in one day, just a partnership announcement between a very traditional, very well-established company like Temenos and Mbanq, 5-year-old company in its scale phase, created $500 million in value.
Wow, that's incredible. And then Christina Chi, if you can also chime in 1 minute or so.
Yes. Okay. Really, really quickly. So scale, first off, how do we define scale and what is that, right? So I'm just going to go really quick, funny example. We used to use a company called Pilot for tax and like bookkeeping services. Before that, we used a boutique tax firm that was like a local boutique with like, I don't know, 20 or 30 employees or something, right? Pilot is worth $2 billion today. They're like literally the biggest company in our industry today, but their number of employees is tiny compared to a lot of these firms. And so the reason why Pilot is worth 2 billion versus my local tax boutique, they might be able to sell themselves at like $3 million one day, right? Really tiny. But Pilot, on the other hand, is worth way more. And the reason why is because they've achieved scale. Because one tax person at Pilot handles 1,000 startup accounts, which is insane. Versus my local tax boutique, one person might handle, at most maybe 10 or 12 different accounts, but that's about it because they just get overwhelmed. There's too much manual work. And so because they were able to automate a lot of the monthly bookkeeping and the tax work, they're able to achieve a level of scale and thus a valuation that matches the scale that they've achieved. And so again, scale is just the definition is that you are bringing home more revenue than you're needing to spend, meaning like you can have one person who handles a lot more accounts. That's fantastic. You don't need to hire 100 other people to handle that. So that's the perfect example that we have in our company of what it means to at least see, other companies scale.
Yeah, thank you so much, Christina. And I have really good, oh, sorry, Ziad, go ahead.
Christina, I think one more question is we're done. It's been an hour and a half.
Okay. Okay, so well, then this is tough because we have, I don't know, so many more interesting questions remaining. Let me think, just give me one moment because I have a list of like maybe 5, 6 other very cool questions. This question gets asked a lot or mentioned, or it's just a curiosity. Are fintechs overvalued? What's your personal opinion on it? And what's your response?
I'd like to rephrase it a bit different. When you reach those high sky multiples, I mean, there must be a secret sauce for that. What is the secret sauce for reaching those high sky multiples in fintech in particular?
Okay, as the owner of one of those high companies, Databento is currently worth over 100 million. So it's not that big, but for a pre-launch company, I guess it's okay. So yeah, I mean, we are definitely overvalued. And we achieve that because we basically say, look, we're the data backbone of any company any app or product that needs financial data behind the scenes. When you pull up Robinhood and you pull up the stock price of GME, where does that data come from, right? Comes from vendors like us. And so that's how we pitch ourselves and that's how we position ourselves. Now, do we deserve it economically speaking? I mean, the value of your company is the value that someone is willing to buy you at, right? Like the value of you sell your, let's say your Apple Watch in the secondary market, right? You're going to sell it for whatever value your buyer and you agree upon, whatever that mutually agreed upon value is. And so that's how I view it. Is it overvalued? Are we ever going to have like maybe a SoftBank moment, where SoftBank invested in WeWork and then it turned out it was a total sham, unless we have any kind of big controversy, right? Like if I'm self-dealing, which I am not, or if there's any kind of, like dishonest activity behind the scenes, then yeah, absolutely, like a Theranos event, then yeah, they don't deserve their value. But so long as you're working honestly, you're transparent about your returns, you're transparent about everything, then absolutely, you deserve the value that your investors and you can mutually agree upon, is how I typically view it. But right now, a lot of startups are overvalued in the sense that like you start a company in like 2 years, it becomes a unicorn. Yeah, that's higher than we've ever seen before. Is it going to collapse one day? Maybe it'll go back down to regular prices. It's kind of like housing prices these days in America, right? Super expensive to get a house anywhere. So it's kind of, it's overvalued in the sense that like you're paying like $1 million for like 1,000 square foot home or less. Whereas like compared to 10 or even 5 years ago, right? Like this house was worth way less than $1 million. So yeah, values have skyrocketed over the years. And will it come back to normal again? I actually don't think so, unless there's like a huge economic crash that comes by in the next couple of years or so.
I'll jump in to piggyback on Christina's comment and previous comment around scalability too. I think it was a very good way of describing scalability. But I think scalability is what ends up driving at least the vision, the calculation, and the assessment for the valuation for fintechs. If you can create one product that can service millions and billions of people and can perform and process billions of transactions at a time from your basement, I think that is something where you can see a very low level of investment initially that can provide a lot of return. The second thing is the revolution happening right now, and it's been happening since really Salesforce kind of introduced the concept of software as a service, but how software is delivered and consumed, finding new markets to bring that model into it is going to unlock kind of new addressable markets that we could not address before. And I think that is an opportunity as an investor. When you're looking at a TAM, it's one thing to identify the TAM, but how do you unlock? Do you have the right strategy? Do you have the right technology to unlock that? And if you do, then you can see a multiple, you can see the vision, and you believe in the team to execute on that.
Yeah, and just to wrap up, are a lot of these overvalued? You can make the case they are, especially if you compare pretty much zero earnings with traditional means of valuing companies. So in terms of a multiple of XYZ fintech startup compared to Visa, yeah, they're definitely overvalued, but investors are willing to pay for growth, because if you look at what Amazon did year after year after year, it just kept growing and they didn't care about earnings. They just kept putting the money back into the company, and it grew as they pushed earnings up. So that's what's going to happen with a lot of these fintechs, is that they will grow faster because we're all banging on a door that is opening up very, very quickly and will grow very, very quickly. So that's why there is value, because people are willing to pay a premium for growth.
That's fantastic. That's fantastic.
Can I just add?
Yes, Vlad, please go ahead, please.
So one thing we've noticed as well since the beginning of COVID is that there is also excess liquidity in the market. So some of the investors, or a lot of the investors, are also backed by traditional banks, and they have to find ways to invest somewhere, and a lot of them invest in fintechs. So everybody can see that the fintech market generally has become much stronger since the beginning of COVID. I think one topic we haven't really touched here is COVID, right? COVID has really driven value in a lot of fintech businesses. I see it in Mbanq, in my business, but I also see the fact that there's a lot of money in the market. If you have a great idea, if certain stars aligned, if you have the right team, just what Carmelle was saying before, if you have patents, or what Tom was saying, or some know-how or trade secrets, like Christina was saying, if you put this all together in the market where there's excess liquidity, of course, it drives prices. And so, we are all happily enjoying this moment.
Yeah. Ziad, I just quickly wanted to mention, unless everybody literally wants to jump off right this second, I would like to propose that we ask the most asked question. There are at least 10 or more people that ask me the same question. And then I would propose that we close with closing remarks from the panelists. If that's okay, then I'm just going to jump into the question.
Go ahead.
Yep. Okay. So the one that asked it, but I got the same from a lot of other people, was Greg Bauer of Spinnaker Ventures, logging in from Medellin in Colombia, asks, as digital national currencies become mainstream, will the extreme volatility we're currently witnessing stabilize at what point, and what's your reasoning behind that? And this question is directed to the entire panel.
What could you be more specific, Greg, in terms of the volatility? When you say volatility, the Nigerian naira can be pretty volatile, whereas the Kenyan shilling is relatively stable. Doing a fiat version, a digital version of those fiat currencies, theoretically should not change the volatility as they're perceived on the foreign exchange markets.
What I was referring to, Tom, was volatility. Sorry for the background noise behind me. Volatility of things like Bitcoin and Ethereum and so forth, which are all over the place. Will we see that same kind of volatility in national fiat currencies? And will, as national fiat currencies, as national governments establish digital stable currencies, will that bring stability to the overall digital currency markets? That's the question I was really trying to ask.
My opinion, then again, I'll give up to the panel, is the answer is no. Having a digital version of a Nigerian naira is not affected in any way, shape, or form by with the fluctuations of Bitcoin or dog coin or any other crap coin like that. It'll follow exactly along the lines of what it's accepted in the international communities. And that's where I think Salvador has made a huge mistake in the fact that they are now, if they really throw in as much as they think they're going to throw in, they have to go out and buy Bitcoin to prop up their economy if Bitcoin crashes. I mean, it could destroy their economy. Now, there's upsides if they do base everything in Salvador on Bitcoin. They, as a country, could grow rich. He's taken a long shot here, but unfortunately, none of the products or goods and services in El Salvador will be, again, sellable on the global scale because their goods and services will be priced too high. But the individuals in the country will feel rich. So it cuts both ways when you adopt a currency that's not in your ability to control, like you would if you issue your own stable coin. You base it on someone else's coin, you're at the mercy and the whims of the market.
Yeah, I'll follow up with that if that's okay. Tom is right that the CBDCs on their own will not change when it comes to the foreign exchange relationship that they have to other currencies. There is an argument on whether CBDCs counter cryptos in the market and making them less relevant because now the central bank is addressing with cash, which is broadly accepted already, addressing the need for more efficient infrastructure. But I think if you think about the drivers that are fueling cryptocurrencies today, those are not particularly going to change when it comes to a country introducing their own CBDC right away. The need for speculation, the need for something that earns high return, the need for diverse set of assets to invest in and portfolio management and so on. I think we're going to see a continued need for that asset because CBDCs will not behave like a typical crypto when it comes to running on algorithms or different, economic factors on how many tokens were issued, what is the balance, and so on. So you're going to see a different set of economics, but there is an opportunity to stabilize a country's currency by issuing CBDC. And that comes with tying the issuance and the CBDC to trade factors, right? When you think about the economic factors on why a country currency is not as valued or devalues, can you find economic factors to attach to that currency to address some key challenges. Nigeria is a good example. They have very limited sources of revenue. It's oil-based. So diversification of the economy are part of the benefits that we talk to central banks about when it comes to using their CBDCs.
Okay, Christina, I'd like to come with closing remarks by each panelist right now, and then I will address my closing remarks.
Yeah, so yeah, thank you everyone. It would be amazing if each panelist that participated this evening could, in 1 to 2 minutes max, kind of, make closing remarks, any either statements, important statements, present important questions, even warnings, or information that you think is important for the audience to know, be aware of, understand, / Google or research immediately afterwards. So yeah, I'll start with Christina Chi.
Okay, sure. I guess we're in a time today that, probably none of us had ever imagined even like a year ago, right? Like we thought everything was going to be a disaster. And then 2 years ago, right, we never thought that COVID would happen. And so we're just in such a weird time right now. But I would say definitely with that has come a lot of really cool technologies that are all born through the hardest times ever. And so one thing to note is, like, as you guys are building out your respective businesses or working for your respective companies, like the biggest thing that has helped me throughout the years to kind of understand and process things that are happening is just like learning to normalize rejection. And I know that's not related to crypto at all, but but just meaning like, every day I still continue to be rejected by investors. I continue to be rejected by, I don't know, like lawyers, customers, whatever, right? But it's like, so long as you normalize and be like, okay, here's my mountain of rejections, move on, just learn to like move on from that. I think that for me has helped me a lot in terms of learning how to do business and not getting too emotional about anything and just moving on. So yeah, that's one thing that I've definitely learned that's helped a lot over the years. And the other thing is just like live the life that you want to live and not the life that other people expect of you to live. Like, look, no one would want me to ever start a high frequency trading firm, right? Literally the most controversial industry in the world. But I did it. And the other thing is I use it as a learning opportunity for people who are, saying HFT is evil, you guys are, awful. I use it as an opportunity to teach people about the world and the pros and cons of the industry. And yeah, there's a lot of bad things too that need to be improved. And so just using it as a chance to educate people has also been very helpful for me and very meaningful. So yeah, I'll leave you guys just with that, is like learn to normalize rejections in your life. And then so long as you can do that, then when you get a yes, it's like amazing, right? And also just living your life, not the life that if you're younger, your life your parents expected of you a long time ago, or the life that your friend group wants you to live. And so for me, that's definitely just knowing that has helped me a lot and given me a lot more confidence in pursuing my passion. So thank you all so much. This is fantastic.
Thanks, Christina. I'm going to throw the same question to Carmelle.
Well, thank you. I'll take the opportunity to reiterate the timing in which we live right now. We have a major paradigm shift that we're witnessing. And I think what we're talking about today highlights that. However, the big wave, the big corner that we are witnessing and happening here is around how does the whole infrastructure modernize and move into a very different stage of technology that is driven by technology. For as long as we thought regulators and banking and ecosystem players having difficulty to onboard and understand that new technology, it's happening, demand is driving it. We are seeing great valuation and also great opportunities for investors. For us as a company, focusing on digitizing the central banking layer is a moonshot, because we do see central banking being important and for the foreseeable future. However, it is going to change. It is going to address different problems. So you're going to see modern central banking emerge, and that's going to impact every citizen, every bank, and every fintech that probably a lot of investors here invested in.
Thank you so much, Carmelle. And I'd like for Vlad to give his closing remarks, then Tom, and then we'll have Ziad give his concluding remarks for the evening.
Thank you. I think that there's a lot of, I know there's a lot of wealth that's been created in the FinTech. It's well deserved. I think COVID helped immensely. I think that all of those household names, Chime, MoneyLion, Affirm, Square, yes, of course, they may be valued under different circumstances, but at least it gives us an idea of how much valued fintech can be. And so being at the right spot at the right time, just like what Carmelle was saying, just like what everybody else was saying, we are privileged to be in this spot, and let's make most of it.
Well, I echo Vlad and Carmelle's and Christina's sentiments. I love the opportunity to give an opinion, if you will, on this chat. I think it's been great questions, a great panel. And again, if you're a startup, if you're an entrepreneur, keyword is passion. Don't be a doctor if you want to be a lawyer. And for God's sakes, do not be a lawyer. Just period. End of story. But for the most part, there is a huge opportunity in this world to grow yourself as a person, as well as to obviously make a lot of money. This startup industry is not for everybody. You do have to have a tough skin, as Christina mentioned. And here she's been very successful, and she still has people tell her no. So again, just passion, and the passion overcomes everything else. So, you know, again, thank you so much for the opportunity. We really, it's been a fun crew. This has been a good chat. I appreciate it.
Thank you, Tom. Thank you, all of you. What a stellar group of panelists. I commend all of you, really. Well, there has never been a better time than today to make real money. So people tell me, oh, can we make this kind of money right now? Like 10 years ago, it was easier. No, never been any time in history where you can make more money than today. If you know what you're doing, if you surround yourself with the right people, if you have the passion, you learn the skills, you acquire the tools. You know, somebody asked some time ago, you know, I read this a couple of places. Does Jeff Bezos deserve this kind of money he has? He's going to be soon the $200 billion man, you know, and Amazon is going to be a $1 trillion company. He owns like around 20%, 19% of the company. Does he deserve this? Of course he deserves this. You know how much wealth he created? Shareholders, even the consumers, to acquire such product, such services at such a low price. That's capitalism at its best. Capitalism works, always has worked, but you need discipline to acquire this. It's not going to fall in your lap. It's not going to be given to you by the government. He's not going to give it to anything. You're smart, you're fearless, you're passionate. The sky is the limit, especially today, with all these asset classes out there. This forum, this Financial Policy Council, is exactly for that. We're here to empower people to become capitalists, to bring in on board people, experts in any asset class, to educate people. It's all in the education, you know? And number one, and second thing, I don't believe we're born equal. We live equal or we die equal. So this equality crap, you know, leave it for the socialists. It doesn't work. Then what works is each one of us is different. Each one of us has certain skills. We have to, you know what? The seed is in each one of us. Some of them don't develop the seed until later in life or never. And others, like Christina, develop the seed very quickly, very early in life, and go for it, full blast. So I would like to really leave this on a positive note. Now you know what we do at the Financial Policy Council, and we've been doing it very successfully for the last 10, 11 years. There is no organization out there who does what we do. They talk theory, academics, economics, etc. I honestly, and I agree with Tom on that, I have zero respect for lawyers, bankers, economists, statisticians, all that crap. You know why? Because they pontificate. They don't have skin in the game. Each one of you, me included, on top of it, has enormous skin in the game. And this is why we succeed. Or we fail. And if we fail, we learn from our failures. That's pretty much it. I'd like you to be supportive to what we do. Now you know what we do. If you have some people who think they can add value and be panelists. I mean, the thing with Tom, you know, I sent him an invite about the Bitcoin webinar of last time. He told me, I love what you do. I'd love to participate. I told him, Tom, we'll do it next time at the FinTech one. He told me, great. So this is how we get our speakers, word of mouth, marketing, etc. That's the power of capitalism. Thank you very much for your time. Have a great evening.
Yeah, thank you, everyone.
Thanks, everyone.
Thanks, everyone.
Enjoyed it.
Great session.
Thank you, guys.
I'm coming to Columbia, Greg.
Pardon me?
I'm coming to Columbia, whether you like it or not.
Hey, the door's open, and I'll keep the Mai Tais waiting, Tom.
Like I said, we got a footprint down there. My guy's been banging down there for years.
Well, we'll have to talk about that.
Yeah, we'll do offline.
Okay, perfect. See you guys.
Thanks,
Take care.
everyone. Appreciate it.
Thank you. Bye-bye. Bye-bye, Christina.
Bye.
Good job, Christina.
Yeah, thank you. Greg and I go way back, so it was nice to see his face.
Great.
Yeah, super seminar. Thank you so much.
Yeah, thanks, Ed, for the inviting, and thanks, Christina, for hosting. That was a great panel.
Shin-Yun. So just what we're gonna do is for the panelists that want to stay on board, you guys can stay on board. I think it would be good, like we usually do, have the board stay online just so we can kind of debrief. But to everyone else, thank you so much for joining. It was wonderful to see so many wonderful people joining in from all around the world.
I got a 6 o'clock, so I'm going to say goodbye. Talk to you guys soon.
Okay, good to see you. I still call him Iron Man in my head. So.
I'll take it. Bye-bye. Bye, Ziad.
Yeah.
Bye.
Bye, Tony Stark. So.
I think people just don't want to leave.
They don't want to leave.
Maybe we give like one last chance for a what's it called? Pending question, burning question.
We're supposed to leave if we're not part of the board, right? That's what you said.
Yes.
Okay, I understand.
So we're just having the board remain, the Financial Policy Council board remain, can stay on, and also any panelists. Okay, we still have 28 participants on the line. Ziad, do you have any remarks?
Well, I think I gave my closing remark loud and clear. I think thanks, Vlad, for sponsoring this. Appreciate.
Pleasure as always.
I hope it came to your full satisfaction. I was very satisfied.
You did indeed. I got a lot of direct messages from potential clients, which is also very good. Always can never say no to that.
Yeah.
That's amazing.
We still have 24 people, Christina.
Yeah, I mean, you know what? I'm kind of gonna go out on a whim. Ziad kind of knows. I think he does. I'm a little bit of a ask forgiveness, not permission person. So if you guys are on the line and want to remain on for the next like 5-ish minutes, I would recommend just put your camera and your mics on and ask whatever question or introduce yourselves. And otherwise, we'll just assume that your computers just stayed on randomly. I don't see any computers, any cameras switching back on.
Why? You sure we still on?
Sorry?
I'm sorry, who's this?
One
Oh.
second, I might have to unmute all because technically the session officially is until 6 p.m. Eastern time. So one moment.
Okay, Christina, I think we can close and leave, all of us.
Okay, we'll do that. And Ziad, I'll just give you a call then.
Yeah, please.
Yeah. Okay, thanks everyone
you.
for joining. Wonderful event.
Thank you all.
Yeah.
I'm leaving. Bye.
Have a good one. Bye.
Bye.
Thanks, and bye. Glad, everybody.
Thank you. Bye-bye.